If the US decides to buy 1 million Bitcoin for a strategic reserve, it would have profound effects on the Bitcoin market, global financial systems, and potentially geopolitics. Here's what could likely happen. Immediate market impact. 1. Price surge. The announcement or even rumors of such a move would likely cause Bitcoin's price to skyrocket. A purchase of 1 million Bitcoin, roughly 4.76% of the total supply, would create a significant demand shock in a market already constrained by Bitcoin's fixed supply. 2. Market liquidity crunch. Acquiring this much Bitcoin without driving prices dramatically higher would be challenging. The US would need to use sophisticated accumulation strategies, such as over-the-counter (OTC) purchases or mining subsidies, to avoid spiking prices prematurely. 3. Speculative FOMO. Retail and institutional investors would likely jump in, fearing missing out on a massive rally, further driving up the price. Strategic and economic implications. 1. Legitimization of Bitcoin. This would be the ultimate signal of Bitcoin's legitimacy as a reserve asset. Other governments might follow suit, triggering a wave of national Bitcoin acquisitions, similar to gold. It could accelerate Bitcoin's transition from a speculative asset to a global reserve currency. 2. Impact on dollar hegemony. This move could reflect concerns over the long-term stability of the US dollar or the need to hedge against inflation and geopolitical risks. It might strengthen Bitcoin's role as a non-sovereign global reserve asset, potentially undermining the dollar's dominance in global trade over time. 3. Geopolitical rivalries. Nations like China and Russia, already wary of US dominance, might see this as a threat and escalate their own Bitcoin strategies. Countries holding Bitcoin reserves would gain a strategic advantage, forcing others to either follow suit or risk being left behind in this new financial paradigm. Technological and cultural impacts. 1. Investment in mining. The US might invest in domestic Bitcoin mining infrastructure to secure its holdings, possibly subsidizing mining operations to reduce reliance on foreign-mined Bitcoin. 2. Public awareness and adoption. Bitcoin's adoption by the US government would likely catalyze mass adoption among individuals, corporations, and institutions. Bitcoin-based technologies, e.g. Lightning Network, smart contracts, might gain wider adoption as the ecosystem matures. Potential risks. 1. Market volatility. The sheer size of the purchase could introduce extreme short-term volatility. If not handled carefully, it could destabilize both Bitcoin markets and broader financial systems. 2. Regulatory backlash. Governments and central banks resistant to Bitcoin could impose stricter regulations or outright bans to counter its growing influence. 3. Centralization concerns. Holding such a significant share of Bitcoin could raise concerns about centralization of power, going against Bitcoin's decentralized ethos. Potential outcomes. Massive wealth transfer. Early Bitcoin adopters and hodlers would benefit immensely, while latecomers might face significantly higher entry prices. Bitcoin as digital gold. This move would solidify Bitcoin's role as a store of value, akin to digital gold, but with broader utility due to its divisibility, portability, and programmability. Shift in global reserve asset paradigm. Bitcoin could start replacing or complementing gold and US treasuries as the go-to reserve asset for nations. This strategic move would signal that Bitcoin is no longer just a speculative investment, but a critical part of the global financial system's future. The decision would mark a seismic shift with long-term consequences for economic, financial, and geopolitical landscapes.